Ladies and gentlemen, welcome back to another investing video with me, this time about my top 5 stock market holdings that make up over 50% of my entire portfolio, so I hope I'll be right with them. Q2 2021 was again a blowout quarter for most of the companies in my portfolio, except for one that I'll be covering later. I'll start with the 5th largest position in my portfolio, whereas the number 1 position that will be in the end of the video makes up nearly 1/5 of my entire portfolio. Viewers of this channel will know which stock this will probably be. Alright, surprisingly, the 5th largest asset in my stockbroker account at the moment isn't actually a share, but cash. I hold about 7% cash at the moment and accumulate more and more every month since I haven't been buying anything over the last months. Alright, but you guys are here for stock investments, so my 5th largest position is Starbucks. Starbucks is the largest coffee producer in the world. Customers can enjoy their coffee in over 33,000 stores worldwide. In the process, Starbucks has introduced the third place, a room between your living room and your workplace. It's like a familiar living room in the city. It's the same in any place in the world, worldwide. With nearly 6% of my portfolio, I've been buying Starbucks stock since 2017, when it was around $47, and again in the mini crash last year at around $50. With the stock now standing at around $120, I had a pretty nice return.
Nice.
On the stock price increase, as well as on the dividend payments that make around $1.90 per year, so that definitely pays for my monthly visit to Starbucks. For me, Starbucks is a very long-term hold. At the moment, I wouldn't really buy any new stock because of my very low buy-in. However, in times of crisis, like last year when the stock goes down nearly 40-50% because it's a cyclic stock, because in crisis people buy less coffee for a short amount of time because they maybe want to save money, then I would go in and buy more of this stock because I'm very confident that this company will recover from most crises. Facebook stock comes in at number 4, the company with nearly 2.9 billion active monthly users around the world.
But it is going to bother you because you're human, and I was human. I am human.
Dominates social media around the world, except in China. We spend several hours each day on Facebook, Instagram and WhatsApp, and during this time, Facebook can collect data about us and knows us better and knows what we love. Facebook therefore knows us as much as our best friends and family members. That's why Facebook can provide businesses with the most relevant user data and advertising space, and this is Facebook's business model. They sell advertising space on all their platforms. Of course, this also has consequences. Not everyone likes their data being shared, and privacy is becoming more and more important these days, with Apple, for example, in their iOS 14.5 update, where they won't allow users to decide if they want to share their personal data with third-party apps like Facebook and Instagram. The company is highly profitable and has over $50 billion sitting around in cash, so they could buy any competitor if they wanted, even without taking on debt. Facebook is considered a fast grower after Peter Lynch, which requires a company to at least grow 10% or more in earnings per year. Facebook grows 20%. And the stock at the moment is relatively cheap compared to other tech stocks, with a PE ratio of 26 compared to other high-flying stocks that barely have any profits, and PE is way over 100. First time I bought the stock was back in 2018 with a share price average of around $145 per share. Now it's sitting at around $360. Nice profit. I'm always buying Facebook stocks when there is a new scandal of Facebook, because then the stock usually drops around 10% in a day, but then very quickly recovers again. At the moment, I'm not planning to buy any more stock, but I'm holding all my positions in for the long run. The next tech stock in my portfolio is the largest company in the world and makes up 10% of my portfolio. What do I even have to say about a company that can sell its customers $700 wheels for their computer? Apple is just an amazing company. The last quarter was again insane for them, especially the iPhone sales went up 50% year over year. Yes, we had the COVID crisis the year before, but it's still insane. Also, the China growth was very good, better than expected. And we should also not forget about the small but quarterly paying dividend that Apple puts in our pockets. My number 2 stock dropped 7% on earnings this week. Amazon is an empire that offers a variety of services over the internet. It missed on quarterly revenues, as you can see here. However, these quarterly numbers are nice to see in general, but for the long-term investor that wants to invest for more than 3, 5, or 10 years, these numbers are pretty much irrelevant. Amazon.com is the #1 shopping website in the world. Amazon Web Services is the #1 cloud service in the world, and Amazon Prime Video is the #2 streaming service in the world. The stock makes up 11% of my portfolio, and I'm confident to keep it for a very long time. Even though Jeff Bezos is not the CEO anymore and now focuses on building his empire into space, I think the growth for Amazon can easily continue, as we saw also in Apple when Tim Cook overtook the position as CEO of the company. People argue that the mastermind Steve Jobs is now not around here anymore and the company will not perform that good anymore. That was not the case at all. So yeah, I'm not worrying about this much. All right, my #1 is Tesla, baby. Hate it or love it, since March 2020 I gained over 700% with the stock, and therefore it's also my biggest position. I think at Wall Street you either love Tesla or hate it and think it's highly overvalued. Either way, I'm very relaxed with my position because I have such a low buy-in, and I wouldn't mind if the stock would drop from here 20 or 30%. That would make it for a nice price to buy more stock. With over 200,000 cars now delivered in the last quarter, Tesla really showed that they can scale their production, which actually is the most difficult part of an engineering company like Tesla. The prototype is built very fast, but then scale the production to high volume. This is what only few companies can do. Tesla's cars are much more than just vehicles though. They are basically driving computers. The software components inside a Tesla are better than of any other automaker at the moment. I'm not only talking about the UI of the screen, I'm also talking about the capabilities of the processors inside the Tesla that will potentially allow for a self-driving car in the future. I recently also read that Tesla has one of the biggest supercomputers in the world to process all the data that their vehicles are collecting. Tesla is valuated as a hardware and software company, much like Apple. That's why their valuation is also this high at the moment. I'm confident that Tesla and Elon Musk, who has, by the way, announced that he will stay at Tesla several years to come, will be able to scale the production and allow for autonomous driving capabilities that allow for 99.99% flawlessness. At the current price, I could see myself buy some more shares because it's significantly down from the high of $900, and I will hold my current position for a long time to come. And now I want to hear from you guys. Which stocks do you hold in your portfolio at the moment? Let me know in the comments. I'm very curious. I hope you found this video insightful. Please subscribe if you like this video, and see you in the next one. Bye bye.